Good evening, everybody. In our first class in the new year 2021, to which we all are looking with some very great hopes. And as I have mentioned in my last session, you, final CA students, are specifically looking to this year with some special hopes. Everybody is hoping that within this year, uh, two simple initials will get added to your name. This is what is, say, whole expectation of a CA student. So, wishing all of you a very, very happy new year. And with this, we start our today's discussion. Okay. Since last two sessions, we are discussing, we are analyzing various provisions related with the assessment of companies. Okay. Last two sessions, we have devoted about all the discussion, various issues related with the assessment of companies. This session and the next session, that is all in all these two sessions, now we shall be discussing about various provisions related with the assessment of other entities other than companies, individual, partnership firm, mutual concern, number of other entities. Provisions specifically applicable for these entities is going to be our focus of discussion in this session and the next session. Okay. As I mentioned in earlier session also, all these provisions, what we are discussing in these sessions, they are specifically relevant for that particular entity. The majority of the provisions of income tax are applicable for all the entities. How to calculate capital gains. Assessee may be individual, maybe company, maybe partnership firm. I calculate capital gains in the similar manner. I calculate business income in the similar manner. But then there are special provisions which are applicable with respect to that particular entity only. So those entity specific provisions are what we are discussing in this chapter of assessment of entities. Okay. So company assessment we have discussed in earlier two sessions. Today we shall be starting our discussion with some very basic initial ideas related with the income tax, that is assessment of individual. Okay. Assessment of individual, some special provisions which are applicable for individual as such. Specifically, what are the rates of taxation, surcharge, then a very, very important concept of marginal relief. And the most important part of this assessment of individual from this year onwards, from the assessment year 2021 onwards, the concept of optional lower rate mechanism introduced in the income tax, that is going to be our main area of discussion so far as this assessment of individual is concerned. Okay. So let's start by generating a quick overview about the rates of taxation. I'm sure you all must be already aware about these rates of taxation and everything. So we will simply have a quick review of these rates. But as I'm saying again and again in my sessions, all my sessions are meant basically to give you those ideas which are hidden in the main provisions. The main basic provisions you might have studied already, you may read it from other books, notes, study material. What we mainly do in our sessions is to pick up those smaller, those finer points which may not get that much attention during the course of normal studies, but which are very, very vital, which are very, very important from a final CA perspective. So same idea, we will be, with the same idea, we will be having our today's discussion also. Basic rates of taxation. Everybody is clear. All of us have a very good idea. In the income tax, so far as individual is concerned, there are three different slabs of taxation. Okay. One, what we call normal rates. Second, rates applicable for senior citizens. And third is rates applicable for very senior citizens, super senior citizens also, we call it. So three different slabs of taxation. What are these slabs of taxation? We shall be discussing it in the next slide. I'm sure you might be knowing it already. But before this, as the key feature of my sessions, the hidden points, the reading between the lines, what some normally get missed, but we need to have a clear idea about those important salient final points. Okay, so when the act talks about senior citizen, what exactly it means? Who is a senior citizen? And then each one of us can say, sir, I know, depending upon the age of the assessee, whomsoever has completed 60 years of age, he or she is senior citizen. 80 years of age, then very senior citizen, that's okay. But still there are two very very important points hidden in this very simple concept. Okay, senior citizen, first of all, any individual resident in India. First point to be noted, senior or very senior citizen is not only about the age, it is also about the residential status. Only a resident in India can be this senior or very senior citizen. All the special provisions, all the benefits, all the special slabs applicable for senior citizen, the basic requirement is this: the assessee, the individual should be resident in India. If that individual is non-resident in India, then the normal rates would be applicable. So examiner may create a very royal confusion in the exam by mentioning that assessee is 65 years of age, non-resident in India. I may simply miss that non-resident part. I simply read 65 years of age and I jump on the conclusion. Oh, that special slab of tax would be applicable. Absolutely no. So keep in mind, this is CA final. They love catching you on all these smaller, finer, hidden concepts only. They very well know that basic rates of tax, everybody is aware. Okay, 60, 80 years of age, everybody knows. But what not many people are clear, but you need to have a clarity, that is senior citizen, not only about age, but it is also about residential status. So individual resident in India, okay, first. Then who is of the age of 60 years or more, then he is senior citizen. Who is of the age of 80 years or more, then he is very senior citizen. Special rates for very senior citizen would be applicable when assessee is of the age of 80 years or more. Okay. Now another hidden, another salient point involved here. This 80 years or the 60 years age is to be seen on which date? Whether on 1st of April, whether throughout the year, whether on the last day of the year, when I will be seeing this age of 60 years or this age of 80 years. Okay. Again, if I am your examiner, I will deliberately create a question where exactly on 31st March 21, the assessee would be completing 60 years of age. So I will give a date of birth as 31st of March 1961. The date of birth is 31st March 1961. So exactly on the last day of the previous year, for me, the May 21 examination, applicable previous year is 2021. So now assessee's date of birth is 31st March 1961. On 31st March 2021, he will be completing exactly 60 years of age. Whether for my previous year, special rate would be applicable or not. And they've asked these kind of questions. In earlier examination, they've created all these kind of say problems. Deliberately, they are creating a situation where I get into a royal confusion. Now, 31st March 21, the person is completing 60 years of age, whether he is a senior citizen or not. Conventional wisdom will give me an idea. The common sense will tell me, oh, 364 days during the year, the person was not of 60 years of age. Only one day he is of 60 years of age. How he can get a benefit for this year? So common sense will tell me, no. For this year, this special benefit would not be applicable. Normal rates would be applicable. And in tax laws, common sense does not have much of the applicability. Reading carefully is what is required. Now, when Act talks about the senior citizen, it uses a very specific word. It says 60 years or more at any time during the previous year. Now, the set any time during the previous year is important. Whatever reading material is available with you, books or act or notes or study material of ICAI, go there and then see this particular language. It mentions 60 years or more at any time during the previous year. So it is written there. Only thing, when I study how much it gets registered in my mind. Okay, so now see it very, very carefully, underline, highlight it any time during the previous year. What it means, even for one day in the year, the person has completed this age of 60, he is a senior citizen for that previous year also. So if somebody has born on 31st of March 1961, I am talking about PY 2021. On 31st March 21, he has completed 60 years. For PY 2021 also, he is entitled for rates applicable for senior citizens. Don't apply common sense. Simply apply your taxation logic, the knowledge of taxation. Okay, so read it very, very carefully. 60 years or more at any time during the previous year, 80 years or more at any time during the previous year, coupled with the fact individual should be resident in India. Okay. So, very simple idea. 3 slabs of taxation. What are the percentages? What are these rates? You all know already. But what needs to be seen very, very carefully is what exactly is the meaning of senior citizen, very senior citizen, that age of 60 or 80, when it is to be seen at any time during the year, even on the last day of the year, the assessee has completed 60 or 80 years, is entitled for those special rates. Okay. Now, what are these rates? You all know it already. I'm not going to tell you this. We all know what are the rates by heart. And even if somebody asks me in the say 3 o'clock midnight, you should be able to tell, okay, these are the rates of taxation. These are the slabs. Okay, the basic differences in the first slab up to 2.5, no tax liability. Normal rates up to 3 lakhs, no tax liability, and up to 5 lakhs, no tax liability. Then 2.5 to 5 or 3 to 5, it is 5%. Beyond 5 lakhs, it is common 5 to 10, 20% for everybody. Beyond 10 lakhs, 30% is the slab of taxation for everybody. So this is what is this basic rate of taxation. Okay. So, individuals assessment, basic rate of tax, 3 different slab. Okay, so Sumit from Jaipur is here with a question. What if the date of birth is 1/4/1961? Yeah. So with taxation that way is a very simple subject also. If you read the provision carefully, then every answer is available in that provision itself, in the act itself. You are not required to go anywhere else. You are not required to go and ask somebody also. If you can read it carefully. In your case, if it is the date of birth is 1/4/1961, when he will be completing 60 years? On 1/4/2021. My previous year ends on 31st March 21. He is not a senior citizen for 2021. He will be a senior citizen in 21-22. Okay. So my previous year at any time, even for one day, he has completed age of 60 years, he will be treated as a senior citizen. Okay. Now, these are these rates of taxation. We already know it. After this rates of taxation, now one very, very specific provision applicable for individual. Section 87A, rebate of income tax. I'm sure majority of you must already have a clarity about this provision also. In the case of an individual who is resident in India and whose total income is up to rupees 5 lakhs, a rebate is available. Again, the important point which needs to be noted, this 87A rebate, normally it is related with the income. Okay, everybody recalls it only in terms of 5 lakhs of income, rebate is available. Strictly speaking, again, it is not only related with the income, it is related with my residential status also. So examiner may again unnecessarily create a problem for you by mentioning SAC is a non-resident and then he gives total income at 4.5 lakhs. Rebate is not available. So resident in India, income up to 5 lakhs of rupees, rebate from income tax is available. How much is the rebate? How much is the rebate? Rebate would be tax amount or 12,500 rupees, whichever is lower. Maximum up to 12,500, the rebate is available under section 87A. Tax amount or this 12,500, whichever is lower, that will be the rebate available. Practically speaking, what will be the impact of this rebate? If my income is up to 5 lakhs, I am a non-senior citizen, my income is 5 lakhs exactly. I'm a resident in India, I'm entitled for this rebate. At 5 lakhs income, my tax liability would be first 2.5 lakhs zero, next 2.5 lakhs at the rate of 5%, it will be 12,500. So 12,500 would be my tax liability, 12,500 would be the rebate available, net impact would be my tax liability will be zero. So what Act is doing, they have not said that up to 5 lakhs no tax would be calculated, tax is to be calculated, but then the total tax would be allowed as a rebate under section 87A. So if my tax liability at 5 lakhs is 12,500, 12,500 rebate I can claim. So normally, generally speaking, because of this rebate mechanism, Remya, I will answer to your query at the end of the class. I think Remya and Sumit both are having same kind of query. We will discuss it after the class. Let's not involve everybody into this confusion. We will discuss it separately. Okay. Now coming to this rebate. So normally because of this rebate mechanism, if my income is up to 5 lakhs of rupees, no tax would be payable by me. This is normally generally is the situation. But then there may be a situation where income is up to 5 lakhs, still even after considering rebate, I may require to pay some tax. The maximum amount of this rebate, 12,500, is mentioned in the act itself. But there and normally if my income is up to is exactly 5 lakhs, my tax liability is 12,500. But then there may be a situation, say for example, where my income is 5 lakhs, but this 5 lakhs includes 1 lakh of long-term capital gain taxable at the rate of 20%. So if I'm having 1 lakh long-term capital gain taxable at the rate of 20%, then at 5 lakhs, my tax liability would be more than 12,500. Rebate still would be 12,500. In that case, balance amount of tax would be payable by me. Okay. So normally, generally, if assessee's income does not include any income taxable at a special rate, then up to 5 lakhs, because of this rebate mechanism, the tax liability of assessee would be zero. But then there may be certain cases where at 5 lakhs, my tax liability may be more than 12,500. Rebate is maximum 12,500. Then the balance tax would be payable by me. Very important idea related with the rebate. It is available only to the resident in India. Non-residents, neither that a senior citizen special slab is applicable, nor does this benefit of rebate is available to a non-resident. Okay. Fine. Now coming to surcharge. With respect to individual, now there are four different slabs of surcharge. Okay, if my total income is up to 50 lakhs, then no surcharge is payable. The surcharge starts at 50 lakhs. In the case of individual, surcharge starts at 50 lakhs. More than 50 lakhs total income, surcharge payable at the rate of 10%. More than 1 crore, surcharge 15%. More than 2 crore, 25%. More than 5 crores, surcharge shoots up to 37%. Okay, so two important things. Normally, for all the SACs, surcharge starts after 1 crore. We have discussed with respect to company already. More than 1 crore, then surcharge applies. For individual, surcharge applies from 50 lakhs income onwards. And then there are four different slabs, four different thresholds: 50 lakh, 1 crore, 2 crore, and then 5 crore. Okay. Then the surcharge is payable at the rate of 10%, 15%, 25%, and 37%. Okay, income should be more than this limit, up to 50 lakhs. If income is exactly 50 lakhs, no surcharge is payable. If it is 50 lakhs one, then surcharge comes into picture. If income is 5 crore one, then surcharge would be 37%. Up to 5 crore, then the surcharge would be 25%. Okay, so income should be more than this particular limit. So this is what is this surcharge. Now, along with surcharge, in this we again had a discussion during the course of company assessments, but we will discuss it again, a very, very important concept. Along with surcharge, there is a concept of marginal relief also. But before marginal relief, this is the cess applicable, and this is applicable common for everybody. For all the assessees, the cess figure is common, that is 4%. 4% of tax plus surcharge. Okay, health and education cess, the cess which is payable for the applicable year, that is health and education cess. Okay, so apart from tax and surcharge, health and education cess at the rate of 4% is also payable. Now, along with surcharge, whenever there is a surcharge, there is always the concept of marginal relief applicable. So let's again revisit this concept of marginal relief with respect to surcharge applicable for individual. Okay, the idea is this: normally the surcharge is to be calculated at the prescribed rate, that 10%, 15%, 25%, 37%. But in some cases, because of this marginal relief, the surcharge amount may be even less than those prescribed rates. What is this concept? In the case of an individual having total income exceeding rupees 50 lakhs, but up to rupees 1 crore, the total income tax and surcharge shall not exceed tax. Hello. 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 Yeah, I think all set now. Some technical problem somewhere. Yeah, okay. Now I have got your feedback also. Everything is fine. Perfect, perfect. Okay. So let's continue where we have left earlier. This is regarding this surcharge and marginal relief is what we were discussing. Okay. So the idea is this: whenever there is this surcharge, marginal relief may become applicable. The idea is this: if my income is more than 50 lakhs, then whatever is the total tax plus surcharge payable by me, it cannot be more than the maximum limit. What is that maximum limit? The maximum limit is tax payable on 50 lakhs income plus whatever is the excess income I have derived. How much is the excess income? Income over and above that threshold of 50 lakhs. That much is the maximum amount payable by me. Similar is the situation where my income is more than 1 crore, 2 crore or 5 crores, different threshold of surcharge. My total income tax plus surcharge payable cannot be more than the tax plus surcharge payable at the threshold, that is at the level of 1 crore, 2 crore or 5 crore, whatever is the tax plus surcharge payable plus whatever is the excess income I have derived. Okay. Based on this, what we will do, let's generate an example in order to develop a complete step-by-step idea related with this whole surcharge calculation, considering the marginal relief. Let's generate a step-by-step understanding through an example, and then I will throw a question also for you in order to you to solve it on your own. But first, uh, that calculation aspect, that step-by-step understanding. Income is 50 lakhs. If my income is 50 lakhs, I am an individual, non-senior citizen, 45 years of age. So as per that slab, tax payable would be 13 lakhs 12,500. Anybody who wish to check the correctness of this figure, he or she can do the calculation. But we can proceed further. As per the slabs applicable, the income at 50 lakhs shall generate a tax liability of 13 lakhs 12,500. Okay. On that 13 lakhs 12,500, surcharge would be obviously zero. So my tax plus surcharge would be 13,12,500. This is now my basic calculation. Okay. Now the question is this: if my income is 51 lakhs, how much would be the tax plus surcharge payable? Okay, let's take this as an example. Then I will throw a question for you to do it. Okay, but the calculation we will do here itself. That is, if the income is 51 lakhs, how much would be the surcharge payable? What I should not do and what I should do in the examination, both things we will discuss. So 51 lakhs is my income. Then we can see that I am having an excess income, that is income over and above that surcharge threshold. The surcharge threshold is 50. Income over and above that surcharge threshold is 1 lakh. Excess income 1 lakh I am deriving. Where we will use this 1 lakh excess income, we will see later on. But right now, my total income is 51 lakhs. Tax payable on that 51 lakhs income would be 13 lakhs 42,500 as per that slab. Applicable for individual less than 60 years of age, whatever is the slab applicable, that will give me a tax amount of 13 lakhs 42,500. Now, since my income is more than 50 lakhs, I need to calculate surcharge. The rate of surcharge is 10%, more than 50 lakhs, it is 10%. So 13 lakhs 42,500 is the tax. The surcharge at the rate of 10% would be 134,250. So based on this, my tax plus surcharge comes to 14 lakhs 76,750. This is what is the calculation normal person would be doing, but we should not do. And as I have mentioned, we will discuss both the things, what we should do and what we should not do, what mistake we may commit. That is the idea we are generating, and then how to do a correct calculation, that also we will discuss. So I may do a wrong calculation by simply applying the 10% rate of surcharge on my tax amount, and accordingly I can get this answer of 14,76,750 as tax plus surcharge payable. But this is not the correct answer. Why it is not the correct answer? Because provision says when income is more than 50 lakhs, surcharge is payable, but this tax plus surcharge amount cannot be more than the tax payable at 50 lakhs, that is 13 lakhs 12,500 plus excess income. The excess income of 1 lakh, whatever is the income over and above that threshold I have calculated, that 1 lakh excess income. So provision says that okay, the rate of surcharge is 10%, but that is only half of the story. That is only half understanding of the provision. The complete understanding of the provision would be surcharge is 10% of tax, but at the same time, tax plus surcharge cannot be more than the tax payable at 50 lakhs income plus excess income. So maximum tax plus surcharge payable by assessee in this case would be 14 lakhs 12,500. So I should not calculate 1476,750. I should calculate 14 lakhs 12,500 as the tax and surcharge payable. On this 14 lakhs 12,500, the cess would be calculated at the rate of 4%. So this will be 56,500. Total tax plus surcharge plus cess payable would be 14 lakhs 69,000 in this case. Okay. As per the rate of surcharge, my tax plus surcharge payable was 1476,750, but it cannot be more than 1412,500. That means I am getting a relief. This is what is called marginal relief. The difference of this 1476,750 and 1412,500, 64,250 is marginal relief. Okay. In examination, you may not be required to calculate the marginal relief. If you can calculate the amount payable directly, that is fine enough. Okay. Technically speaking, the 64,250 is the marginal relief assessee would be getting in this case, and accordingly, tax plus surcharge payable would be 1412,500. Okay. So idea what we need to keep in mind. And it all depends how I study the things, how I keep the things in my memory, how I commit to the memory the things. Okay. So if I keep the things simply in this manner, that surcharge payable is 10%, 15%, 25% or 37%, then in some cases I may commit a mistake because I'm keeping only half of the concept in mind. So keep that complete concept in mind. How much is the surcharge if income is more than 50 lakhs? How much is the surcharge? Normally it is 10% of tax payable, but at the same time, this tax plus surcharge payable cannot be more than tax at 50 lakhs income plus excess income. Keep in mind the concept of surcharge in this manner. In examination, this memorizing the provision in this manner will automatically help you to do a proper calculation considering this marginal relief also into picture. So if the income is 51 lakhs, the tax plus surcharge payable would not be 1476,750, it will be 14 lakhs 12,500. This is what is the concept of surcharge. This is what is the concept of marginal relief. Okay. Now, just to test whether you have got this idea absolutely clear in your mind or not, let's throw a question for you to do a calculation, a very simple kind of question. Simply change this question little bit. Total income is 51 lakhs of rupees. Assessee is a 65-year age individual resident in India. Assessee is a 65 years age individual, 65 years of age resident in India. This is what is the information the question is given to you. Total income 51 lakhs, assessee 65 years of age. or rather say not 65 years. Let's do it for 85 years of age. Okay, sorry. Do a calculation with respect to 85 years of age. That will make things a bit easier. So assessee is a person 85 years of age, individual, resident in India, having a total income of 51 lakhs. Do the calculation. How much would be the tax plus surcharge payable by this person? Assessee is a 85 years old resident in India. How much would be the tax and surcharge payable by this? "85 years of age, assessee, resident in India, income is 51 lakhs. How much would be the tax plus surcharge payable?" Okay, first answer, Sumit from Jaipur. But Sumit, I think you need to check it again. 85 years of age, huh? The assessee's age is 85 years. Okay. Ambika from Mumbai, would you like to check it again? Sumit from Jaipur, just clarify, your figure is only of tax or it is all inclusive? Manoj from Noida, correct answer. Hema from Chennai, correct answer. Ambika from Mumbai, you need to check it again. Anjali somewhere from Punjab, check it again. All inclusive. Fine. Then it is correct. Sumit from Jaipur. Yeah. SP Muthulakshmi from Madurai. Correct. Okay. So let's see what will be the calculation. Let me just share the Excel sheet with you. Okay. So my income is 51 lakhs. Assessee is a very senior citizen. Okay. The question has not given you a direct calculation. They have given you simply hint 85 years of age, resident in India. That means slab applicable for very senior citizen is to be applied up to 5 lakhs, no tax, 5 to 10, 20%, 10 lakhs onwards, 30%. Okay. So in this case, he is a person having income of 51 lakhs. How much would be the tax payable at 50 lakhs income? Considering the slab applicable for very senior citizen, the tax payable at 50 lakhs income would be 13 lakhs. First 5 lakhs 0, next 5 lakhs 1 lakh at the rate of 20%, remaining 40 lakhs at the rate of 30%, 12 lakhs. So tax payable at 50 lakhs would be 13 lakhs. At this level, obviously no surcharge is payable. Now tax at 51 lakhs. Tax at 51 lakhs would be 13 lakhs 30,000. Okay, if my income is 51 lakhs, then 13 lakhs 30,000 would be my tax. Okay. Against this tax, now I'm into threshold of surcharge. So 10% surcharge may be calculated here. 13 lakhs 30,000 plus 10%, that will be 1 lakh 33,000. Okay, but then this will give me a total of 14 lakhs 63,000. But then the concept is this: my tax payable cannot be more than 13 lakhs plus 1 lakh excess. Tax at 50 lakhs is 13 lakhs plus excess 1 lakh. My tax plus surcharge cannot be more than 13 plus 1. 14 lakhs is the maximum tax plus surcharge I require to pay. So 14 lakhs is the surcharge, 4% is the cess, 56,000. All inclusive tax plus surcharge plus cess payable would be 14 lakhs 56,000. If I have to calculate amount of marginal relief, it would be 14 lakhs 63,000 minus 14 lakhs 63,000 is the marginal relief this assessee would be getting. 14 lakhs would be the tax plus surcharge payable. Cess inclusive 14 lakhs 56,000 would be the all inclusive amount payable by this assessee. Okay. Fine. So this is how this whole marginal relief calculation is to be done. The idea which needs to be kept in mind that the tax plus surcharge payable cannot be more than that particular limit. What is that particular limit? In this case, tax payable at 50 lakhs plus excess income. Okay. As we have discussed it again during the course of that company assessment, this whole calculation would be relevant when the income is marginally above the threshold. Here the income is just above 1 lakh rupees from threshold. If you will take, say for example, 53 or 54 lakhs as the taxable income, then probably this whole calculation would not be relevant. You can simply calculate the tax and calculate 10% of that tax as surcharge. So just keep in mind in the examination, if your income is just above, marginally above your surcharge threshold, then probably this marginal relief calculation may become relevant. Examiner might be deliberately creating the figures in such a manner that your income, taxable income, is just above that surcharge threshold. In that case, be very clear. Examiner wants you to consider this marginal relief also into your calculation. If income is say way above the surcharge threshold, then probably you can do a direct calculation. Okay, so this is all about this whole cess and surcharge and special rates of taxation for the senior citizen, various senior citizen, assessment of individual. Okay, now we come to the next part of this assessment of individual, and this is something very important for examination purposes also, because this is the new amendment. Okay, applicable from AY 21-22 for the first time, your assessment year, your exam assessment year. And then we normally say the May attempt is amendments attempt, so these all are new amendments, new provision. Have a very careful look. Section 115 BAC. Just to give you a background, what is happening in income tax, government has now started this particular process where they are giving a lower rate of tax option to the assessee if assessee is ready to forego certain deductions, certain exemptions, certain benefits. Those who were there with us with respect to company assessment, they should be able to recall. We have discussed this 115 BAA and 115 BAB there. Lower rate of taxation for the company, 22% or 15%. If companies were not claiming certain deduction, then they can go for that optional rate mechanism. So for companies, that optional rate mechanism has been made effective from AY 2021. For individual, now it is being made effective from AY 21-22. So your assessment year would be the first year where individuals would be looking for this particular provision, section 115 BAC, optional lower rate. So idea is this: applicable for individual as well as HUF also. If an individual or HUF does not wish to avail certain deductions, then they may go for optional lower rate of tax. Two main things you would be required to develop a clarity about this new mechanism. First is, what are these new rates of taxation? That needs to be memorized, that needs to be committed to the memory. The slab of taxation, optional slab of taxation A, and B, if you are going for this optional rate, then what all the deductions would not be applicable, what all provisions you must have studied with respect to different heads of income, but all those provisions would not be applicable if somebody is going for this 115 BAC. That is going to be a more complicated task. That is going to be a more something which you would be required to see with all the alertness. But first of all, what are these optional rates? Okay, this is what is this new slab of taxation. Very simple idea how to memorize it. Every 2.5 there is a change of 5%. First 2.50, next 2.55%, next 2.5 10%, next 2.5 15, next 2.5 20. Like this, every 2.5 lakhs there is a increase in rate of 5%, and ultimately beyond 15 lakhs 30% slab would be applicable. So this is what is this optional lower rate of taxation. Cess and surcharge would be applicable normally. If the income is more than 50 lakhs, then the surcharge would be applicable as per those rates. Cess would always be there at the rate of 4%. The only change is this basic rate of taxation. This is the new optional slab. Okay, and then these new optional slabs are same for all the age categories. These are all hidden salient points we are now trying to clarify, that these optional rates are same for all the age categories. Here there is no such distinction of this senior citizen or non-senior citizen kind of thing. Optional rate of tax. Okay, so basic rate of tax 3 different slabs depending upon the age. Now this is one common optional slab, lower rate of taxation for all the age groups. First thing. Now if somebody is going for this option, what he or she would be losing? Deductions, exemptions not available. A long list not available. Okay. For the sake of simplicity, what we will be doing, we will be segregating into two parts. One is other than business related, various deductions, exemptions not available. And then there is a list of deduction exemptions which are related with the business income. If you go for this optional rate, then those will also not be applicable. So any assessee who is not having any business income, for him that second next slide would not be relevant. This first slide only will be relevant for that assessee. Deductions, exemptions not available. But now you are going as a student, you are now going to have a difficult task in your hand. It's a very difficult, different kind of challenge. And this happens only in income tax. You need to memorize something, but then you also need to know when you are not supposed to apply this thing, when this is to be applied and when this is not to be applied. Okay, what all the deductions are normally available, you should have a clarity. But then out of this would not be available if assessee is going for optional rate. That also you need to have a clarity. Okay, fine. So now what all deductions are not available if my assessee is going for 115 BSc optional mechanism. I've tried to create again a simplified list rather than going for the section number. We are directly going to the concept. So first exemption deduction would not be available. That is with respect to that leave travel allowance. All these provisions you must have studied with respect to specific chapter. We are simply generating an overall view here. If I am having a salary income, I may claim that exemption with respect to leave travel allowance 2 times out of a block of 4 years. I can claim that exemption. If I am going for this optional mechanism, then that LTA exemption is not available to me. One, HRA exemption. Again, I'm saving you from the section numbers and everything, which you will find in the books. But we are just trying to see the concept. HRA exemption. Okay, salaried assessee, they can claim exemption with respect to HRA, but if they are going for this optional mechanism, the total HRA would be taxable. No HRA exemption would be available. Two. Then there is the section 1014. There are allowances given to the assessee to meet various expenditure related with their duty. Normally he can claim those allowances as exemption, but then if he is going for this optional lower rate mechanism, these allowances deduction will not be available. But here law further mentions that government may prescribe various allowances for which the exemption would be available. Okay, and then government has prescribed all those 5-6 allowances for which that exemption is available. That is traveling allowance, daily allowance, this helper allowance, this such allowance. Those allowances for which the exemption is available up to the amount of expenditure incurred for that particular purpose, those allowances exemption would be available. Any other kind of allowance exemption would not be available if you are going for this optional mechanism. Then in respect of MPs and MLAs, this daily allowance and constituency allowance, they can claim an exemption under section 10, but not available if they are going for this optional mechanism. Very, very important. What is very important in this whole is this one is this HRA exemption is not available. And second is that standard deduction from the salary, even that is also not available. And that professional tax deduction, that is also not available. Section 16 deductions are not available. Okay. Theoretically speaking, in section 16, you get an exemption with respect to entertainment allowance also. Practically, that entertainment allowance has got not much of the utility. But theoretically speaking, section 16 includes that entertainment allowance. So even that exemption is also not available if you are going for this 115 BSc. So all section 16 deductions are also not available. So with respect to my salary income, these are say various deductions, exemptions which are not allowed. From examination perspective, HRA and the standard deduction, these two are very, very important. These two would not be available. Then coming to house property, that 2 lakhs interest deduction with respect to self-occupied residential house, that is not allowed. Okay. But then if it's a rented house and I am paying an interest for that rented house, that deduction would be available only with respect to that self-occupied residential house. That housing loan interest, which is available normally up to 2 lakhs, that will not be allowed. Then with respect to family pension, if I'm having this income from other sources, family pension, a deduction is allowed 15,000 or 1/3 of the family pension, whichever is lower. Now that deduction with respect to family pension, that is also not allowed if 115 BSc option is exercised. With respect to that minor child clubbing of minor child income, for each minor child I get a deduction of rupees 1500 or actual income clubbed, whichever is lower. 115 BAC, even that 1500 deduction for minor child, that will also not be available. Okay. Then next, and again very, very important, all chapter 6A deductions, starting from even 80C, which is the most commonly used kind of deduction, even that 80C would also not be allowed. 80C, 80D, 80CCC, 80G, all those chapter 6A deduction, 80TTA, 80TTB, 80, any chapter 6A deduction will not be allowed except two. In this whole chapter 6A, two deductions would be allowed. One is 80JAA, that is with respect to assessee having a business. Additional employees appointed during the year, 30% of their wages can be claimed as a deduction. That 80JAA deduction will remain available. Even if I go for 115 BSc, I can claim 80JAA. One more deduction of chapter 6A which would be allowed, that is this section 80CCD subsection 2. Now 80CCD has actually got 2-3 different kind of deductions available. One may get a very confusing idea in mind that all 80CCD deduction would still be available when somebody is going for this 115 BBA. No, 80CCD, every deduction under that section would not be available. What is 80CCD, by the way? 80CCD is this new pension scheme contribution. So in 80CCD, that new pension scheme contribution, I can claim a deduction with respect to assessee's contribution. I can claim a deduction with respect to employer's contribution. So that employer's contribution part, that will available. That deduction will be available even if somebody is going for 115 BAC. Employer's contribution to national pension scheme, that contribution deduction available under section 80CCD2, 80CCD2, that will still remain available. Other 80CCD, that is with respect to assessee's own contribution, 80CCD deduction will not be available if somebody is going for 115 BAC. Okay. So this is something very, very important. Memorizing rates may be easier. Whenever figures are there, we feel a sort of comfort. Somehow or other, we are able to memorize figures very, very easily. So that rate, that slab is something easy to memorize. Exemptions which are not available, that is a difficult part. So be very clear what all deductions would not be available. LTA not allowed, HRA exemption not allowed, that housing loan interest up to 2 lakhs, that deduction is not available. All chapter 6A deductions would not be available except 80JAA and 80CCD2. This is the first list, which is more important. Theoretically speaking, there are other disallowances also, but this is more important practically speaking. So that's why I created a separate list of these items. Then further exemption deductions which are not available, that is only when the assessee is having a business. If in the question given to you, assessee does not have any business, then this particular list would not be of any use there. These deductions which are available related with the business, they will also not be available if assessee is going for 115 BAC. And then just to say lighten your work a bit, these same exemption deductions are not available in respect to companies also when they are going for that optional rate mechanism, that 115 BAA or BAB. Then companies also cannot claim these deductions. Individuals also, when they are going for optional rate mechanism, they cannot claim these exemptions deductions. What are these? Section 10AA, SEZ unit exemption not available. Okay, normal depreciation, wherever depreciation is allowed at a rate more than 40%. If you are going for 115 BAC, maximum rate of depreciation would be 40% only. Depreciation over and above 40% would not be allowed on any asset. Any additional depreciation which is allowed up to 20% of cost of new plant and machinery, that will not be allowed under 115 BAC. Investment allowance 15% of cost of new machinery allowed with respect to certain specific states like Andhra or Telangana or West Bengal. That investment allowance 32 AD would not be available. 33 AB, 33 ABA special deductions for the businesses not available under 115 BAC. Section 35 AD, capital expenditure 100% deduction with respect to certain business. That is also not available with reference to 115 BAC. 35 triple C, 35 CCD not allowed. Section 35 scientific research expenditure. Okay. Any payment made to any outsider, like approved scientific research association, etc., that is normally allowed as a deduction, but not allowed under 115 BAC. And similarly, 35 2AB, scientific research on approved in-house research facility, a weighted deduction is allowed. 150% deduction is allowed under section 35. Even that deduction would also not be available under 115 BAC. So these are various deductions, exemptions not available when somebody is going for 115 BAC, optional rate mechanism. Business related deductions, exemptions not available, and other heads deductions, etc., not available, that we have discussed in the earlier slide. So first part of this new scheme is the rate. Second part of this new scheme is this deductions, exemptions not available. So practically speaking, seeing from a practical perspective, what an assessee in a real life situation has to do is to do a comparison. If I'm entitled for any of these deductions, so taking into account these deductions, what will be my taxable income, what will be my tax liability as per normal rate. And then if I don't claim these deductions, what will be my taxable income and what will be my tax liability as per the special lower rate. This calculation has to be done by every individual, and then he needs to take a call whether to go for the special rate or not. Okay. Okay. So first part is this lower the rate. Second part is this deductions, exemptions not available. Now for our purposes, there is a third part of this topic also, that is how to exercise this option. Okay, the procedural part. How this option is to be exercised. Some rules, some provisions related with this exercising. Okay. Any taxpayer, any assessee who is not having any income from business or profession, he has to exercise this option on an year by year basis, along with ITR of every year. Along with ITR of every year, he has to mention whether he wants to go for this optional rate or not. If he does not mention anything, then the normal rate would be applicable. He has to specifically exercise. But the important point is this: if this a person is not having any business income, then he can exercise this option on a year by year basis. So every year I can decide normal or optional, normal or lower. Every year I can decide. I'm a salaried assessee, not having any business income. So year by year basis, I can decide, I can change. If I am having income from business or profession, then situation is different. Then option is to be exercised on or before the due date of furnishing of ITR. Okay. In case of normal assessee not having business income along with ITR, if I'm filing ITR late, at that time I can exercise the option. But business income, professional income before the due date of furnishing of ITR, the option is to be exercised. And then once it has been exercised, it will remain applicable for all subsequent years. Meaning thereby, in the case of business or professional income, if you have exercised the option once, it is there with you lifelong. Non-business, it is year by year by year. Business case, once you have exercised, it will remain applicable for all the subsequent years. But in this case, once you can come out, you will get one chance in your life to come out. But if you have come out, then it will never be available. Then you cannot go in again. So before going in, you can decide. You may remain in the say old normal regime till you wish. Once you have gone in, this will optional rate would be applicable for whole of the remaining life. Once you can come out, but once you have come out, then again you will never be allowed to go in. This is the sort of this complicated mechanism kind of thing which has been created, but it is there when the assessee is having business or professional income. Not having any business income, then it is simple. Whenever you are filing an ITR, wants to go for this option, pick that option, exercise it, you can change it again year by year basis. Business income, then this complicated set of mechanism is there. Okay, so this is all we are required to discuss with respect to assessment of individual. Surcharge, very important concept of marginal relief, and then this new amendment section 115 BAC. Okay, fine. One small clarification. It's a question raised by Remia from Tiruvananthapuram. All others can also get benefited out of this. Additional depreciation is not available if you exercise this option. Then additional depreciation is not available. That 20%. Now we might be knowing this thing that that 20% additional depreciation. If last year I have purchased certain assets, used it for less than 180 days, then last year that additional depreciation was allowed only 10%. Balance 10% I can claim this year. Now this year I'm going for this option, so I cannot claim that additional depreciation remaining portion of 10%. Law allows me to increase my WDV by that 10% depreciation, which I could not claim last year. And this year, because of this option, I may not be able to claim. So I can increase my WDV by that 10% component, which I could not claim last year. Okay, this is what is the answer to the query raised by Remia from Tiruvananthapuram. Okay, so this is about assessment of individual. Fine. Next topic, we need to start our discussion, that is assessment, taxation of partnership firms and LLP. We can take a break at this point of time, a quick sharp 15 minutes break. After the break, then we will have our discussion regarding taxation of partnership firms and LLP. This is 7:22 in my watch right now. So sharp at 7:37, we will start our discussion again. Okay, have a quick break. Thank you. deductions and deductions, no more rebate available, but that 87A rebate is available even if you go for this optional rate mechanism. That rebate is still there under section 87A. Okay. We all know that 87A rebate is available only up to income rupees 5 lakhs. If your income is even 1 rupee more than 5 lakhs, then 87A rebate will not be available. Up to 5 lakhs income, if you are having, then that rebate is available in both the cases, normal rate situation and that optional rate situation also. Okay. Now, in this second part of our today's session, taxation of partnership firms and taxation of LLP. Okay, fine. The first basic clarity, for the purpose of income tax, LLP and normal partnership firms are same. Okay, legally speaking, LLP is an altogether different kind of entity, but for income tax purposes, all the provisions which are applicable for the partnership firm, they are applicable even for LLP also in the similar manner. The first clarity. Okay. Now, various special provisions related with the partnership firm. First of all, again, rate of taxes. We all know flat 30%, no slab kind of thing. Flat 30% is the tax applicable with respect to partnership firm. Okay. Then partnership firm surcharge is at the rate of 12% when the income exceeds 1 crore. If the income is more than 1 crore, then the surcharge comes into picture. The rate would be 12%. Again, as a student, this may be a slightly difficult task to memorize different rates of surcharge and different threshold. For all assessees, these are different rates, different threshold. For company more than 1 crore, 7%. More than 10 crores, it is 12%. For individual, beyond 50 lakh, surcharge starts. For partnership firm, again, more than 1 crore, then surcharge starts 12%. So my simple suggestion would be, again, simply create a table, prepare a table for all the assessees, surcharge for all the assessees. So which assessee, what is the threshold, what is the rate? Create a simple one pager kind of thing, single shot view, memorize price, you will get a clear-cut idea. Confusion will not be there in examination. Otherwise, there's all chances of somebody getting confused there. For which assessee, what is the threshold and what is the rate? For partnership firm, this is 12% surcharge when the income exceeds more than 1 crore. Okay. Marginal relief provisions are applicable in the case of firm. Whenever there is a surcharge, marginal relief is always relevant. Even in the case of that 115 BAC scheme also, where the rate of taxes are low, surcharge is applicable normally. There also marginal relief is relevant. So whenever there is a surcharge, my income is just above that surcharge threshold, marginal relief is applicable always. Okay. Then for partnership firm, the cess provisions are similar. 4% of tax plus surcharge. If no surcharge, only of tax, 4% cess is payable. So this is what is the basic rate of taxation for partnership firm. Okay. Now special provisions. Special provisions related with the different heads of income. So first of all, with respect to capital gains, there are 2 or 3 very special provisions in the chapter of capital gains, which are applicable specifically for the partnership firms. Okay. First, section 45, subsection 3. Transfer of any capital asset by a partner to the partnership firm. A partner is transferring any capital asset to the partnership firm. Okay. So any transfer of a capital asset by a partner to a partnership firm in which he is a member, this is liable for capital gains. First clarity. Partners may say that partners and partnership firm are not separate. As per the Partnership Act, firms' assets are partners' assets, firms' liability is partners' liability. So when a partner is transferring an asset to the partnership firm, he may say, "Sir, I have not transferred it. Actually, it is my own asset as per partnership law." Income Tax Act says that whatever is the partnership law, that is separate. For our purposes, if you are the partner in a partnership firm, you have transferred something to the firm, this will be treated as transfer, capital gain liability would be there. Now, if there would be a capital gain liability, what would be the sale consideration? Law clarifies further that this transfer may be as a capital contribution or in any other capacity, doesn't make any difference. The whole idea is this: transferor is a partner, transferee is the partnership firm, the capital gain would be applicable. Now, if capital gain would be applicable, what would be the sale consideration for the partner? Now law says that whatever amount has been recorded in the books of accounts of the partnership firm as the value of that capital asset, that will be treated as a deemed sale consideration for the partner. When partner transfers anything to the partnership firm, actually partner does not receive any consideration. No money is received by the partner. Law says that whatever amount entry has been done in the books of accounts of the firm, that will be treated as sale consideration for the partner. As a student of accountancy, we can understand this provision in a very simple manner. Whenever asset has been taken by the firm from the partner, firm would be passing a journal entry, debiting that account of asset, crediting the account of the partner. At whatever amount that entry has been passed, at whatever amount that capital asset has been recorded in the books of accounts of the firm, with the same amount partner's account has been credited by the firm. So this amount shall be treated as sales consideration, deemed sales consideration for the partnership firm. So 45(3), transfer by partner to the partnership firm is a transfer. Amount recorded in the books of accounts of the firm shall be treated as sale consideration for the partner. Now, reverse situation, transfer by a partnership firm to the partner. Here again, section says that if the capital asset has been transferred by partnership firm to the partner, reverse situation, then this is also treated as transfer for firm. The capital gain liability is there on the firm. So partner is transferring to the firm, taxable for partner. Firm is transferring to the partner, then this is taxable for partnership firm as a transfer under the head capital gains. Now, what is important here, and this is something very, very important actually. Now, what will be the sale consideration for the firm? When firm had received the asset, then we have discussed whatever is the accounting entry passed by the firm, that will be treated as sale consideration for the partner. So I may assume that similar concept would be applicable here also. When firm has transferred asset to the partner, then again firm would be passing some accounting entry, crediting that asset account and debiting the partner's capital account. So whether here also the amount of accounting entry would be treated as sale consideration for the firm, law says no. Now when firm is transferring some asset to the partner, the fair market value of the asset as on the date of transfer, that will be treated as sale consideration for the partnership firm. Okay, see it very, very carefully. The fair market value as on the date of transfer. Say for example, okay, the firm was having a plot of land purchased around 20 years back for rupees 10,000. Now today it is appearing in the books of accounts of the firm at 10,000 only. Now firm has transferred this plot of land to the partner. What accounting entry firm would be passing? 10,000 is the book value of that particular plot. I will be crediting that plot account by 10,000. So that account will become 0. And since I have credited plot account by 10,000, I will debit the same amount to the partner's account. So my accounting entry would be by 10,000, which is my purchase price for that particular plot. Now law says that you have transferred an asset to the partner. The fair market value of this asset today shall be treated as sale consideration. This is possible that plot of land purchased 20 years back at rupees 10,000 somewhere nearby, say, international airport at Bangalore, for 10,000. Now 20 years down the line, the fair market value of that plot might be say 50 lakhs. So in your books, it is appearing at 10,000. You have simply transferred it. Law says, no, sir. We will treat 50 lakhs as your sale consideration. 50 lakhs minus 10,000. On 40 lakhs 90,000, you need to pay capital gains, subject to indexation and everything. Now, the practical problem would be firm may not have any money. Firm has not actually sold off that plot. Firm only transferred that plot to the partners. So how to pay the capital gain? Nothing doing. Law says we will calculate the capital gain in this manner only. Whatever is the fair market value, that will be treated as the deemed sale consideration. So again, practically speaking, in a real life situation, whenever a firm wants to transfer any capital asset to the partner, the firm should think twice before doing it. Because if they will transfer it, whatever is the fair market value today, minus their purchase price, difference will become taxable in their hands. They will be required to pay a huge amount of capital gains. If they are actually selling it to a third party, then they are actually realizing money. From this money, they can pay the capital gains tax. But when they are transferring it to the partner, actually they are not realizing any money, but still law says that whatever is the fair market value, that will be treated as the deemed sale consideration. So practically speaking, it's a very, very harsh kind of provision. Okay. Whenever we are studying anything from examination perspective, we should also try to get some idea about the real life impact of that rule. That helps us to develop the understanding also, and that helps us to become a better professional in future. With a better concept, we can see that particular provision. Okay. So partnership firm transferring any asset to the partner, partner transferring asset to the firm, and then firm is transferring asset to the partner. Okay. Now, there are two very important case laws related with this 45(4), firm to partner. Bombay High Court has said that this distribution, transfer by firm to the partner, may be at the time of dissolution or may be at any other time. This transfer need not be at the time of dissolution of firm. Whenever firm is transferring asset to the partner, this 45 rule will be 45(4) will be applicable. Okay. Then second is, in the case of dissolution, whether the taxability would be in the year of dissolution or in the year of actual distribution. Now, Madras High Court has said that in the case of dissolution of the firm, if the assets are being distributed, the actual taxability would be in the year of distribution, not in the year of dissolution. Dissolution has been done somewhere in March 20. The distribution happened in April 20. So financial year 2021 would be the year of taxation, not the financial year 1920. Okay, so two very important clarifications related with this 45(4). Okay. Then two important provisions related with the capital gains. Now business income. Specific provisions applicable for the partnership firm. This is what we are discussing. All other provisions of the capital gains applicable for all the assessees similarly. Now coming to business income. All the provisions of business income applies to partnership firm also as they apply to any other assessee. But then there are certain special provisions of this business income chapter which are having specific relationship for the partnership firm. Okay. Deductibility of salary and interest to the partners, section 40 clause B. Okay, the idea is this, the situation is this. Now there is this partnership firm. Firm is paying salary to its employees. That salary is a deductible expenditure, business expenditure. Firm has taken loan from outsiders, and on this loan, firm is paying interest. That interest is also deductible as business expenditure. The problem is this, when the firm is paying salary and interest to the partners. Now, whether that can be allowed as a deduction or not, because in case you are paying salary and interest to the partners, actually speaking, as per the partnership law, it is a way of distribution of profits only. Okay, if you can recall your partnership accounts at the say CPT Foundation IPCC level, this all were P&L appropriation account item below the line. Okay, profits from the partnership firm, and then we used to say debit salary, interest, and then share of profit. So actually, salary and interest to the partners, practically speaking, as per partnership law, they are distribution of the profit. They are not expenses of the firm. But at the same time, if partner has given a loan to the firm is paying interest. Firm, if the a loan would have been taken from an outsider, then also interest would have been payable, and that interest would be a deductible expenditure. So if interest is being paid to the partner, salary is being paid to the partner, that should also be allowed as a deduction. So now what law has done, the basic concept is this, the basic idea is this: law has said that okay, firm is paying salary and interest to the partners, we will allow a deduction to this, but only when you fulfill certain conditions and only up to a limit. Salary paid to outsider, interest paid to the outsider, there are no further conditions, there are no limits as such. You can claim deduction of any amount. Actual salary paid to your employee might be very high, but still you can claim the deduction. In a case of partner's interest and partner's salary, deduction is available subject to fulfillment of certain conditions and up to a maximum limit. So what are these conditions and what is that particular limit? Let's see one by one. Deductibility of salary and interest to the partner, section 40 small b. Okay. So first of all, if certain conditions are fulfilled. Okay, what are these conditions? For the sake of better understanding, we can segregate these conditions into two types. There are two different types of conditions. First is basic conditions applicable for the firm as such. Okay, some conditions related with the structuring of the firm applicable for the firm as a whole, section 184. And then conditions related with these payments, section 40 clause B. Two sets of conditions are there. Both of these sets of conditions are fulfilled, then only the deduction of interest and salary shall be allowed. First set of conditions which are not directly related with the salary and interest, they are related with the firm as a whole under section 184, and then section 40 clause B, conditions which are directly related with the authorization and quantum of interest and salary. So let's see these conditions one by one. Okay. In order to get the deduction of salary and interest paid to the partners, firm is required to fulfill following conditions. Section 184. What are these conditions? Okay. As I have said, not directly related with the interest and salary, but related with the firm, structuring of the firm as a whole. So the first condition is this: there has to be a partnership deed. There has to be a written a document saying that there is this partnership firm. First condition. Second condition, in that partnership deed, one requirement must be fulfilled, that whatever is the individual share of partner, that should be clearly mentioned. The share of partner should not be unspecified. It should be specified, demarcated, defined. This much would be the share of profit in the partnership deed. You can simply write all partners shall share the profit equally. That is also defined. Or you can write percentage 50-50, or you can write 60-40. That's okay, but it should be defined. And third is this: a certified copy of partnership deed is required to be filed along with the first year's return. And now this is actually a requirement in the law, but practically it is not relevant, because this requirement was relevant when the returns were filed manually. Okay, now when the returns are filed electronically, you cannot file any other annexure along with the return. So in law, this requirement is there, but practically it is of no use. Okay. So practically speaking, two requirements only. From examination perspective, writing an answer in exam, that the third condition is also required to be written. A certified copy of partnership deed is required to be filed along with the return of income of the first previous year. Okay. Practically speaking, this requirement is no more relevant now. So these are basic conditions under section 184 which are required to be fulfilled. Then there is section 185 applicable in this regard, which says that if these conditions are not fulfilled, the deduction of salary and interest paid to the partners shall not be available. And then one more case given by section 185 where this interest and salary would not be allowed as a deduction. If 184 has not been complied with, then interest salary deduction would not be available. And then 185 also says that if there is any failure on the part of the firm as covered under section 144, 144 best judgment assessment. Okay, so whenever there is any failure on the part of partnership firm as mentioned in section 144 best judgment assessment, then in that case also interest and salary paid to the partners deduction shall not be available. Okay, so this is the first set of conditions for claiming deduction on account of interest and salary. This 184, 185 requires to be complied with. Okay. Then second set of conditions given in the main section 40 clause B itself. Okay. Which are the conditions related with the authorization and quantum of payment. Okay. What 40 clause B says? That if you want to claim this interest and salary as a deduction, the payment must be authorized and in accordance with the terms of partnership deed. 184 has said deed must mention the share of profit. Now 40 clause B says deed should also authorize the payment of interest and salary to the partners first. So there has to be something written in the partnership deed that okay, partners shall be paid salary this much, interest this much. That authorization should be there. And then the payment should be in accordance with the terms of partnership deed. Deed is saying that the salary can be paid at 25,000 rupees per month. So salary has to be 25,000 rupees per month only. If deed is saying salary 25,000 rupees per month, you are actually paying 40,000 per month, then extra paid 15,000 shall not be considered for deduction. The payment should be authorized and then it should be in accordance with the terms of the partnership deed. Now, this is very, very important. You cannot authorize the payment with retrospective effect, with backdate. You cannot authorize. Whenever the deed has been made, any payment for the period prior to that particular date is not allowed as a deduction. So payment should not relate to a period prior to the date of deed by which such payment has been authorized. Say, for example, first deed has been made on 1st of April, where you simply couldn't mention anything about payment of interest and salary. Then you revise that particular deed on 1st of January, and the revised deed you have mentioned that okay, salary shall be paid with effect from 1st of April. So now you are saying that payment with effect from April is authorized by the partnership deed. But then law says partnership deed cannot authorize with the retrospective effect. In a backdated manner, the authorization cannot be done. So payment should be authorized by the partnership deed. It should be in accordance with the terms of the deed, and it should relate. It should relate it to a period subsequent to the date of that particular deed. Okay. Then the third condition is related with the quantum with respect to interest. The rate of interest cannot be more than 12% per annum. Deed may authorize a lower rate, then the payment has to be as per that lower rate. If deed authorize a rate more than 12%, maximum 12% per annum will be the amount of deduction. Okay. Then coming to remuneration specifically, one or two conditions specifically for the remuneration. The payment of remuneration should be only to a partner who is a working partner. The deduction would be available only in respect of working partner remuneration. We all know there is a working partner and then there is a sleeping partner also. So if any remuneration has been paid to a non-working sleeping partner, that remuneration is not deductible. Remuneration is to be paid to a partner who is a working partner. Okay. They have defined this working partner, somebody who is actively engaged in conducting the affairs of the business. He or she is a working partner. Okay. Then coming to another aspect related with this remuneration, the maximum limit. With respect to interest to the partners, there is a simple limit kind of provision, 12% per annum. With respect to remuneration, it should be paid to a working partner and then it cannot exceed a maximum amount. Remuneration paid to all the working partners together cannot be more than this limit. Okay, maximum remuneration limit is there. What is that limit? Now here where we will require again to do a finer understanding, a finer analysis of the language would be very, very important. Figures are there that needs to be memorized, but apart from memorizing the figures, that finer understanding would also be involved here. Let's see. So what is that limit? First 3 lakhs of the book profit, or in case of loss, the maximum remuneration can be paid is 1,50,000 or 90% of book profit, whichever is higher. First. Second is profits over and above 3 lakhs, 60% of this excess profit can be paid. This is what is the simple provision. First 3 lakhs of book profit, or in case of loss, 1,50,000 or 90% of book profit, whichever is more. Remaining book profits, 60% of that remaining amount that can be paid. Okay. Now let's see something deeply, reading between the lines. Okay, some hidden concepts. Let's try to explore them. First of all this calculation is related with the book profit. 3 lakhs, more than 3 lakhs, 90%, 60%, all are linked with book profit. What exactly is book profit here? And when we study the company assessment, we talk about MAT. There also we use the word book profit, and their loss is book profit as per the books of accounts, as per the audited P&L account of the company is adjusted by something. But essentially book profit there is as per the audited account, as per the balance sheet and P&L. So in case of firm also, when they are talking about book profit, one can assume book profit is as per books of accounts. This is what the income tax beauty is. Similar terminology, different meaning. So you cannot apply the same meaning everywhere. For partnership firm, the book profit has been given a very different meaning. It has nothing to do with the profits as per my books of accounts. What do I mean by book profit here? Book profit, that means okay, before this, the calculation part of it that we can see, and then what is the meaning of book profit? If say first 3 lakhs, 90% of that book profit. If my total book profit is 7, so first 3 lakhs, 90%, 270, remaining 4 lakhs. Sorry. If my book profit is 3 lakh, then the salary deductible would be 2,70,000. If my book profit is 4 lakhs, then the salary deductible would be 90% of first 3 lakhs and 60% of remaining 1 lakh. If my book profit is 1 lakh only, then what will happen? Still I can claim 1.5 lakhs as the deduction. Okay, what they say, 1.5 or 90% of book profit, whichever is more. So if the book profit is only 1 lakh, still I can claim 1.5 lakhs as a salary. Ultimately, I will have a 50,000 loss, which is permissible. If my book profit is minus 50,000, still I can claim if my book profit is minus 50,000, still I can claim 1,50,000 as salary deduction. Okay, so calculation part. First, let's get a clarity exactly on the calculation part. Even if there is a loss, 1.5 lakh salary can be claimed. The book profit is there, which is even less than 1.5 lakhs, still 1.5 lakh salary deduction can be claimed. 1.5 or 90% of the book profit, whichever is higher, that is what is the first leg. Over and above 3 lakhs book profit, then 60% of that book profit, that would be the deduction available. Okay. Yeah. Now coming to that conceptual clarity. Calculation part, that 3 lakhs, 1.5 lakhs, 90%, even in case of loss, that we have discussed. Now meaning of book profit. As I was saying, it is not the MAT where book profit is as per my P&L account. For companies, for the salary deduction, book profit has been given a specific meaning. What is book profit here? Now, what is very important, the language has got all the possibilities of creating a royal confusion in mind. Book profit means the net profit as shown in the P&L account for the relevant year. So I start feeling, no, this is as per my P&L account. But the next part is important, computed in the manner laid down in chapter 4D before giving any deduction of remuneration to the partners of the firm. Now, chapter 4D is this business income provision of income tax. So what is book profit here is actually what they are trying to say is the book profit. That means the taxable business income, taxable income under the head business and profession, from which all these allowance, disallowance as per income tax has been done, except this remuneration to the partners deduction has not been given. Okay, so the idea is this, the point which needs to be kept in mind very clearly, though word used is book profit, but actually what they mean with this book profit for partners salary deduction calculation, book profit, that means chapter 4D. Chapter 4D is business income. And this will create some more say issues here. This will generate requirement to have a further clarity on this. But the first idea is this is not as per my books of accounts, this is as per business income chapter, so in which depreciation as per income tax has to be considered, all allowability, disallowability, more than 10,000 cash payment disallowed, all these allowability, disallowability as per income tax has been taken into account before deduction of partners remuneration, after doing all other plus minus as per business income chapter, whatever is the book profit, that is the book profit which is to be used for this maximum salary deduction calculation. Okay, now further clarities which will require, any carried forward business loss shall be ignored while calculating book profit, because book profit is as per chapter 4D. Adjustment of carried forward business loss is as per section 70, 71, 72 kind of thing. Okay, we are talking about chapter 4D provision. So any carried forward business loss is to be ignored while calculating book profit. Okay, income taxable under any other head is also to be ignored for the purpose of this provision. Partnership firm is having 10 lakhs as income under business head, 20 lakhs as capital gains. The salary amount deductible would be calculated based on 10 lakhs only. Capital gains, though part of taxable income, shall not be considered for calculating that maximum deductible amount for the salary. Okay, so that book profit is a very important concept. The calculation part, you might be knowing it already, up to 3 lakhs 90%, more than 3 lakhs 60%. But what is important, what is the real final level understanding is going deeper into this concept of book profit. When the loss is book profit, it means profit as per chapter 4D. When they say as per chapter 4D, what actually it means? It means any carried forward business loss would be ignored. It means income taxable under any other head would be ignored for the purpose of this maximum salary deduction calculation. Okay. Now, another clarification, all these final points after discussing the basic provisions, now these final points: authorization of remuneration by the partnership deed. Now, what exactly it means? There is a very important circular clarification issued by the CBDT. Section says that the payment of remuneration must be authorized by the partnership deed and it should be in accordance with the terms of partnership deed. Now, CBDT has given a clarification that in the deed, either the amount of remuneration must be specified or a methodology of determination of that amount must be specified. If nothing such has been done and it has been simply left to be determined by the partners at the end of the year, then this will not be treated as a proper authorization. The deduction would not be available. So in the deed, you have to mention either we will pay 50,000 rupees per month as salary, or you can say 40% of the profit would be paid as salary. Either amount may be specified or the methodology for quantifying amount may be given. If deed simply says that at the end of the year, all partners would sit together and then they will decide whatever salary is payable, that will be treated as finally payable. Not possible. Deed might say at the end of the year, we will send all our books to the chartered accountant and whatever our auditor will say, that much salary we will pay to the partners. Not possible. Either the amount must be specified or the methodology of quantifying that amount must be specified. Then only this will be treated as a proper authorization. Okay. Manner of quantifying remuneration must be specified. Okay, authorization by the partnership deed. Fine. So based on this whole idea, now let's try to generate an illustration. Let's try to see a calculation related with this whole partnership, the salary, the interest payable, how much reduction would be available, some idea by way of this calculation. Okay, so now this is what is the overall figure. Gross receipts, these all are related with business. Expenses, different expenses, salaries, rent, office expenses, interest to the partners remuneration, net profit. Okay, additional information which has been given to me. The capital account balance of partners was 50 lakhs each. Partnership deed has been revised on July 1 to provide for the payment of interest to the partners at the rate of 18% with effect from 1st April. Earlier deed does not have any provision. Remuneration payable to each partner as per deed is rupees 1 lakh per month. Accordingly, total 24 lakhs remuneration has been paid. Rent includes rupees 5 lakhs paid without TDS. Now, based on this, I needed to calculate tax payable by the firm. Okay. Can you do this calculation? Okay. Try to do this calculation. You are required to calculate tax payable by the firm. We have discussed everything for the firm, that rate of tax, the surcharge, the cess, how to calculate the deduction for interest, salary deduction, everything. So based on this and using your all other concepts of business income, which you must have studied earlier, try to find out taxable income of the partnership firm and the tax payable by the partnership firm based on this data. I will give you a 5 minutes time, and after which we will have the discussion on this illustration. But meanwhile, you can try and send me the answers. Sumit from Jaipur, you have to send me the final answer. The question is calculate the tax payable by the firm. So what is required is to calculate the tax payable amount. Raman, you need to check it again. And when the question asks about tax payable, it means everything, tax and cess, and if surcharge is applicable, the final figure payable. Hmm, 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 hmm. No, I'm getting lot many answers, but somehow, somewhere, the problem is there with everybody. Ambika from Mumbai, Nitesh from Sikar, Manoj from Noida, Remya from Thiruvananthapuram. Pan India basis, we are getting answers, but probably there is a problem everywhere. Okay, fine. Let's see it. Okay, let's first analyze. What we need to find out is the tax payable. Tax payable, that means calculating the taxable business income, gross total income, everything. Okay. Taxable business income after considering all the provisions of business income. We are discussing only those specifically applicable for partnership firm. But when I have to calculate the taxable business income, whatever other provisions which are applicable for all the assessees, they are also required to be taken into account. Okay. So I have been given my net profit 2 lakhs. First of all, what I need to do is to add back whatever expenditure are disallowed. Partners remuneration total 24 lakh is not going to be allowed. So I will first add it back. And then I will see how much is my book profit, that is business income in chapter 4D. Based on this, I will calculate the deductible amount. Okay. Any other disallowance which I can find out based on this information, that also I need to consider. So keeping in mind all these aspects, let's see how the question proceeds. Okay. This is what is the net profit calculation. First of all, there is that TDS, that 5 lakhs rent payment on which no TDS has been done. We must be knowing this thing. Whenever you make a payment to a resident without TDS, 30% of that payment gets disallowed. Okay. So I think lot many of you might have missed this particular aspect. for calculating taxable business income, I have to consider all the provisions of business income chapter. If rent has been paid without TDS, 30% of this would be disallowed. So 2 lakhs is my net profit. Then uh, 1,50,000 on account of that rent, 30% of that rent, that would be added back to my profit. Then with respect to interest, how much is the amount debited on account of that interest is 18 lakhs. Whether total 18 lakhs is deductible. Now point number 2 is important. What it says, uh, earlier deed did not have a provision for the payment of interest thereon. I have made a partnership deed only from 1st of July. 1st July has authorized the payment of interest at the rate of 18%. The 1st July deed has allowed payment of interest, that too with the rate of 18%. Prior to 1st July, there was no deed. 1st July deed has authorized the payment with effect from 1st of April. But we have discussed this thing. You cannot authorize with the retrospective effect. Okay. Month of April, May, and June, whatever interest has been paid, there was no deed in force for those particular months which authorized the payment. So whatever authorization has been done by July 1 deed, that is relevant only for July onwards. For the month of April, May, and June, the deed which was in force in that particular period, that deed was not having any provision for the payment of interest. So total interest paid for the month of April, May, and June, that will be disallowed. The first part of this whole interest matter, whatever interest paid for the month of April, May, and June, that will be disallowed for the first 3 months. Okay. So out of this total 18 lakhs, first 3 months interest, 4.5 lakhs will be added back. Now remaining 9 months interest has been paid at the rate of 18%. This is what is the rate mentioned in the deed. But as per income tax, I can claim a deduction only at the rate of 12%. So for remaining 9 months, that 13.5 lakhs interest has been paid at the rate of 18%. I can allow only at the rate of 12%. So excess 6% interest for the remaining 9 months, that is again 4.5 lakhs. That is also to be added back. This might look like complicated calculation, but this is what the CA final is all about. And this is no more than IPCC inter-level income tax we are studying. This is the final level income tax we are studying. Okay. So with respect to that interest, here it once again, there are two issues involved in that interest. First is, for the month of April, May, and June, I cannot give any single paisa by way of interest deduction because April, May, and June, it was not authorized. It has been authorized by the partnership deed, which has came into effect from 1st of July. So April, May, and June, no interest deduction would be available. So out of that total 18 lakhs for 12 months, 3 months interest would be 4.5 lakh. That will be straight away disallowed. First part. Second issue related with that interest, for July onwards, for 9 months period, it has been paid at the rate of 18%. For 9 months period, the interest amount is 13.5 lakhs. But that 13.5 lakhs has been calculated at the rate of 18%. As per law, I can allow a deduction only up to 12%. Excess of 6% interest which has been paid. So for 9 months at the rate of 18%, the interest amount is 13.5. The excess of 6%, that would be 4.5 lakhs for the next 9 months, that would be added back. And whatever remuneration has been paid to the partners, that is also added back in order to find out that figure based on which deductible remuneration would be calculated. So this is my 36.50 lakhs. This is what is called book profit for this partner's remuneration. 36.5 lakhs would be the book profit. On the basis of this 36.5 lakhs, I will be calculating deductible amount of remuneration. First 3 lakhs 90%, 2 lakhs 70,000, balance 33 lakhs 50,000, 60%, 20 lakhs 10,000. All in all, remuneration deductible would be 22 lakhs 80,000. Instead of 24 lakhs paid by me, deductible as per limit would be 22 lakhs 80,000. My taxable business income would be 13 lakhs 70,000. Okay. So now just find out where you have committed the mistake at this stage. After this, the calculation is simple. Okay. Like Raman has mentioned, and I always feel in the class we should share our mistakes also. And then say online classes, probably this facility may not be there, but if you can share your mistake, I can share with all others, so that everybody become aware that probably this kind of mistake I should not repeat. Okay. So Raman has said very candidly that he has disallowed 100% of rent. How many of you others might have done this? And this will help you to memorize an examination also. Okay, in online classes, I did that particular mistake. I should not repeat it again. In examination, this flash will come to you. Your mind will give you this message. And so whenever there is this TDS default, you cannot disallow 100%. Only 30% is to be disallowed. And Sumit, the method of calculation is not important. You can calculate by any which method. Your concept should be right. Anybody else? What mistake you have committed? Yeah, Sumit has given correct answer. Okay, so my business income is 13 lakh 70,000. There is no other income under any other head. So this is my gross total income. No chapter 6 deductions are available. So that 1370 is my taxable income also. On that 13 lakh 70,000, now I need to calculate the tax liability. I am sure whatever are the say wrong answers coming, that is because of only this business income calculation. Tax liability calculation is something very, very simple. 13 lakh 70,000 is my taxable income. 30% of it, 4 lakh 11,000 tax, 4% cess. All in all, tax payable would be 4 lakh 27,440. Sumit Agrawal from Mathura, I got a correct answer from you. Sumit Jain from Jaipur, correct answer. Okay, Ambika deducted entire interest for book profit calculation. Nitesh from Seeker, in case rent paid to NR, then 100% is disallowed. Yes, Nitesh, when the rent is paid to NR, then 100% is disallowed. But if nothing has been given in the question about the residential status, the logical assumption would be the person is resident in India, in which case 30% is to be disallowed. Ambika, I deducted entire interest for book profit calculation. Okay, you failed to apply the rules regarding interest deductibility. Keep in mind. Okay, Remya, interest was taken at the 18% instead of 12%. Okay. See, reading the question carefully is also very, very important. And when you are reading the question, at the same time, back of the mind, relevant provision should keep on running. Okay, this is interest you are reading in the question paper. So what you have studied about that interest, that provision should be there sitting in your mind at the same time. Okay, so now the final answer would be 4,27,440 would be the tax payable. Okay, my business income would be 13,70,000. After all these addition allowance disallowance, 1370 would be my business income. Tax payable at the rate of 30% says total tax payable. Okay, fine. We will do one more question based on this, and that should not take much of the time. exactly similar data. Now, the question is being repeated again for the sake of convenience. It is exactly similar data. You can take my words on this with only one change. Apart from business income as given above, firm has received 1 crore 25 lakhs as a rental income also. What would be the tax payable? What would be the tax payable? Let's see how much is the presence of mind there with the CA students. How much would be the tax payable if there is a rental income of 1 crore 25 lakhs? Business income is going to remain same, I can tell you. Okay, what we have calculated earlier, you can note it down. 13 lakh 70,000 is the business income. So in the next question also, business income is going to remain 30 lakh 70,000. You should not be repeating all those calculations again. We don't want to waste our time there. Although interest, salary, everything will remain same. Business income is 1370. You have to simply consider this additional information. 1 crore 25 lakhs is the rental income. Now, how much would be the tax payable by the firm? I'm again repeating you half of the question. I'm doing it for you. Business income will not change. It will remain 13 lakh 70,000. What we have calculated in the earlier question. You have to apply all other provisions except that business income calculation. Okay. So I have got first answer from Sumit Agrawal Mathura, and I must tell this is the correct answer. Well done, Sumit. There is a small catch involved in this question. I'm really happy to see Sumit from Mathura was able to get that particular catch. Well done, Sumit. Treat yourself today from my side. Have some pedas today. Sumit from Jaipur, you are way off the mark. Why you are giving me total income? I want tax payable, Sumit. Raman from Delhi. Check it again. Nitesh from Seeker. Check it again. Nitesh, you got caught in that trap which examiner is laying down for you. C examination is all about alertness of mind also. You know the things. Only issue is whether it get clicked in those 3 hours or not. Yeah, Sumit from Jaipur. Answer is correct. Remya from Thiruvananthapuram. Beta, you are way off the mark. Remya. In company assessment, you were the first to give the correct answer. You are this time missing something. Manoj from Noida. Give me the answer, beta. Don't give me the process. Everybody knows what is the provision. Are you able to apply it properly or not? This is what is being tested. Oh, Leela from Andhra Pradesh. I think Leela, you are first time answering. Probably you have joined today only. But I must tell this is the correct answer. Great, keep it up. Leela from Andhra Pradesh. Andhra Pradesh is a very big state. Which city you are? So we have got three correct answers till now. One is from Mathura, second is from Jaipur, third is from Andhra Pradesh. No, Nitesh from Seeker, still not able to get it. This is what the CA final is all about. Examiner will try to create all possible traps for you. Could you save yourself from getting trapped? You know it. And the moment I will tell you, Nitesh, you will simply hit your head. Oh my gosh, I know this. Let's see. Okay. We are running out of time. So the same question, 13,70,000 is going to be 13,70,000 is going to be my business income. Very simply, add to it my house property income. Now, I don't think I need to tell you that in house property income, you won't be adding total 1 crore 25 lakhs. There is this 30% deduction, which is always available. So 1 crore 25 lakhs minus 30% deduction under section 24, the taxable house property income is 87 lakhs 50,000. Okay. I'm very sure none of you would have committed mistake at least at this point, adding total 1.25. Okay, each one of you, I have a full belief that each one of you would have considered this 30% deduction. So your house property income is 18.7 lakhs 50,000, and accordingly, my taxable income would be 1 crore 1 lakh 20,000. Okay. Now on this taxable income of 1 crore 1 lakh 20,000, I need to calculate my tax liability. Okay. How much would be my tax liability? 30%, 30 lakhs 36,000. Okay. On this 30%, now I can calculate cess directly at the 4%. And if I do this, I will be making the biggest mistake of my life. Right? This is partnership firm. Income is more than 1 crore. The surcharge is to be considered. Nobody in the examination is going to come to you and tell, please calculate surcharge also. This is your mind who should supply this message to you within those 3 hours only, not after coming out of the exam hall. Within those 3 hours, if this information gets clicked in your mind, that means you have studied with all the conceptual clarity. Income is more than 1 crore. The surcharge is to be calculated. Very good. So in the examination, you are able to catch it. Yeah. Surcharge is applicable. How much is the surcharge? With all the scratching of your heads, partnership firm, it is 12%. So 12% of 30 lakhs 36,000 is the surcharge, 3 lakhs 64,320. Yeah, Nitesh, you got it now. Just slap yourself, just give yourself a tight slap. You will be able to recall it for whole of your life now. Surcharge is 12%, 3,64,320. This is what not many of you might have done. But then whenever there is a surcharge, there is a marginal relief also. The total tax plus surcharge cannot exceed tax on 1 crore plus my excess income. Tax on 1 crore is 30 lakhs plus excess income is 1,20,000. So my tax plus surcharge would be 31,20,000 only. On that 31,20,000, then cess of 4%, 124,800. The total tax payable would be 32,044, 32 lakhs 44,800. Ramya from Tiruvananthapuram. Don't tell me you were not knowing this. You were knowing this, but your mind has not given you the right message at the right time. So from Sikar to Tiruvananthapuram, same kind of mistake. Marginal relief, whenever the surcharge is there, and specifically where the income is just above the surcharge threshold. Nobody, this is what the CA final is all about. My specific purpose of having this question is to give you that idea. In income tax paper, nobody will tell you what you are required to do. Your mind should only tell you that, okay, this thing is required to be done. In all other subjects, they will tell you. In accounts, they will tell you, okay, this is the trial balance, make a balance sheet out of it. In income tax, they will not tell you, please calculate marginal relief. Your mind should supply this message. And maximum time the problem happens in the DTL paper only because of this. I know everything, but my mind doesn't give me the right message at the right time. I know what is marginal relief, how to calculate. If examiner would have written, please consider marginal relief, I would have calculated very easily. But income tax is not about calculation. Income tax is about giving your mind giving you the right message at the right time. Marginal relief calculation. Okay, so 32 lakhs 44,800 is going to be my final tax liability in this case. Okay, and meanwhile, Leela has sent us the answer. She is from Vijayawada. Vijayawada is a lovely city, Leela. Okay, keep it up. Fine. So this is all about partnership firm, various issues. One last point related with the partnership firm, and then we will wind up today's discussion. Okay. Nitesh from Seeker, always keep in mind. Yeah, you commit a mistake and then it remains always there with you in your mind. Fine. Okay. So probably in examination, whenever the question of surcharge will come, you will be able to recall marginal relief and you will be actually able to recall me also there. Fine enough. Good. The last point related with the partnership firm, one very specific, very interesting clarification given by the court. Okay, this is CA final. So all these judicial interpretations are also having their importance for our purposes. Okay, payment to partners for specific services which are not in the capacity of partner. Okay, try to get this idea very clearly. This is a somewhat confusing situation. What they say that any remuneration, any salary paid to the partners, there is a maximum ceiling applicable. Beyond the ceiling, you cannot claim the deduction for that remuneration, that salary. Okay. Beyond that, say ceiling, you cannot claim a deduction for that remuneration, that salary. But now courts have given a very interesting interpretation. If partner has rendered some specific service to the firm, not in the capacity of a partner, but in the capacity of an expert kind of thing, then the payment for these services is not hit by the restrictions covered under section 40 clause B. That payment is allowed as a deduction separately, not as a partner's remuneration, but separately. Any service, though the service provider is the partner, but he is giving the service not in the capacity of a partner, but in the capacity of an expert. As a professional, he is giving some special services. Then remuneration for these services is not salary to the partners, it is allowed separately, directly. Okay, say for example, now there is a partnership firm where one doctor and one engineer has made certain investments in say in any oil mill kind of manufacturing unit. Doctor and engineer both have made certain investments. They are partners. Fine. Now in the same factory, some accident happens, and then this partner, who is also a doctor, treats those patients in his clinic. For this, firm is making a payment to this doctor. Now he is not doing this activity in the capacity of a partner. He is acting as an expert, as a professional. Okay, he is in the partnership. He is doing that business in the capacity of a partner. But this services he is providing in the capacity of an expert. Courts have said that remuneration for these services is allowed as a deduction over and above limit created by section 40 clause B. Now, when we will say he is acting as a partner and when we will say he is acting in the capacity of an expert, it's a question of fact. Depending upon the facts and circumstances of the case, you cannot have any defined criteria for this, but this is what you need to see. This is what you need to understand, whether the payment is being made in the capacity of a partner or payment is being made in the capacity of an expert. Okay, there are two partners, partnership firm. Now firm is constructing a building, and for construction of building they happen to believe in Vastu Shastra. So it has been decided that okay, let's consult some Vastu consultant. One of the partners says, no, I also have a good study on Vastu, so I can also give you some advice. Whatever payment you will be making to that Vastu consultant, you can make a payment to me also. So here again, the partner is acting in the capacity of an expert, not in the capacity of a partner. For this, whatever remuneration is being given to him, that remuneration shall be allowed as a deduction over and above restrictions created by section 40 clause B. Okay, so this is what a very important clarification. This is one of the relevant case law. Number of other case laws are also there on the very same topic. Okay, Rajam Raman Swamy and Sons, Madras High Court. Fine. So I think this completes our discussion related with the assessment of firm. And this is all the time we are having for today's discussion. I will be having one last session that will be on 5th of January, where I shall be discussing about assessment of other entities, AOP, BOI, mutual concern, securitization trust, and all other smaller entities. We shall have a discussion on the 5th of next month. Okay, so we conclude this discussion here. We are having some more say feedback on this, what mistakes they have committed. This is good. You are accepting your mistake. At least writing down your mistake will help you to recall it, not to commit it in future. Okay, so Remia has probably missed on giving 30% deduction. These all are say automatic deductions. This is the important point. Nobody is going to tell you that this is what is to be done. Your mind can only supply you this message. Whenever there is this rental income, 30% deduction will automatically come. Whenever income is more than the surcharge threshold, surcharge will automatically come. Whenever there is a surcharge, marginal relief will come there. Okay, automatic calculations, the provisions which have to be applied looking to the facts and circumstances of the case, not because any hint has been given in the question, but based on the data, based on the facts of the case, the calculation is to be done. Okay. Okay. Sumit from Jaipur is sending a correction to us. That is with respect to 1st of April. There is the CBDT circular which says that if somebody has born on 1st of April, he will be completing 1 year on next 31st of March. So we can go by that clarification also, Sumit. If 1st of April is the date of birth, on 31st March, 1 year has been completed, and accordingly that 60 or 80 age attainment can be considered. Okay, we go by that CBT circular. I correct myself on that point. Thank you for giving us this information. Fine. I think we just ran out of time allotted for our today's discussion. Yeah, Nitesh from Seeker. Agreed. Okay. So completing our today's discussion, closing it down. Thank you very much. Bye bye. Good night.